Let's test the audio. Can you guys hear me? If someone can confirm in the chat. Sounds good. All right, cool. Hello guys, welcome to the Trading Parrot. This is another edition of the live stream, monthly live stream. Today we're gonna be focused on TA. I have so many things to tell you. So many things have changed. And today we're gonna focus on where can we go from here. And as usual, you're gonna get a lot of information here that you won't find anywhere else. Combination of standard indicators with obviously indicators that are ours and that are going to help you to navigate better the market. So make sure you are comfortable and that you have enough time to dig all this information, because I'm sure you're going to find here a lot of things that you won't find in any other channel. So let's get started. First of all, I'm going to cover the general markets. I'm going to cover the indexes, okay? And I'm going to start with the DXY. Why the DXY? Because it's extremely important to know where the dollar currency index is heading now. That's going to give us a huge, massive clue on whether risk-on assets like Bitcoin and crypto can be going next. So let's focus on that first. You can see that we have all this massive run on the dollar index and we started coming down. And right now, if we zoom in here, you're going to notice that we are just above this level there. I had my alert to tell me when we break the level 102.5. That level of support there and resistance there, it's the level that I wanted to see that we break to the downside to have more confidence that the movement is sustainable to the upside. Now, stay with me until the very end of the video, because this is just one model. This is just one single area of attention that we need to keep our eyes on. And it's going to give us big clues of where can we go, but it's the overall picture what matters to take better informed decisions. So what's going on with the DXY? Well, we broke the support, the 102.5. I put an alert on exactly that level, and I received like 100 email alerts because the price was struggling to break it. And then it's like the price wants to come back up 102.5, given all the news, especially with the CPI report last week. So it made a huge effort to stay above 102.5. But as you can see, we broke below, and right now we are below and we are attempting to retest the breakdown. So that means that dollar, if it stays below that level, it should be heading to the next level, potentially 101 or even lower. And that is good for risk-on assets. Let's have a look at the other indexes. And this one is also very important. We have to pay attention to what the Nasdaq is doing, because it's technology. Obviously, is the closest index that we can look for what crypto is going to do. And you can see we have this downwards sloping resistance here, and we are just being confronted once more with that level. So this is giving fear to the bulls, obviously, because we already had 1, 2, 3, 4 rejections with this trend line, and it's a big boss that if we want to have more upside, in my opinion, we have to break above and hold. Now, DXY breaking below 102.5, it's giving us some hints that there is a likelihood that we might be able to break it very soon and hold it as support and have potentially some more upside. This upwards sloping support here on the RSI is also showing us that the momentum is still going to the upside. We just bounce once more there at the end of the 2022. So that has been good. Potentially there could be a reversal back to this trend. As long as we hold this, we are still having momentum to the upside on the Nasdaq. Let's have a look at the SPY. The SPY actually, let's see, this has already broken out. So it's hinting that potentially Nasdaq might follow with what this one is doing. Some people are drawing the trend line a little bit higher using the wicks. And personally, I use the close candle to draw my trend lines. So in my perception here, we have broken, slightly. It's not a full candle on top. We still don't see a confirmation, but it's promising again. Let's have a look at the next one. This, guys, this is big. Okay, we haven't had from Cerberus, from this indicator. Just 1 second, I'm going to explain what this indicator is. But let me tell you one thing. The most accurate signal, probably long term, that I look and I pay attention, probably my top 3, top 5 signals is Cerberus. And Cerberus has been able to tell me when to take away my investment from alts, okay? Because this indicator is based on the ratio between the stable coins versus all crypto. And when the ratio goes to very overheated, there is too much invested relative to the total market cap of all crypto, then we get a warning sell. A warning sell we got right there. We got a warning sell here that made just slightly higher just before we got to the all-time high. We got one at 48 precisely at this candle right before this drop of 62%. We got another one here. So what else do you need to trade in crypto? I mean, look at this. One more warning sell on the 31st of October. It's my dream indicator. And right now, we are getting a warning sell at 20.8. Okay. We didn't have, unfortunately, this was very disappointing because I was expecting Cerberus to reset here, to do, to bottom out, to signal for me to run more bots with different altcoins, including BTC. Why not? But it kind of bounced there and it didn't allow me to enter at my preferred entry point. But still, it very quickly with this move, people are going mental, they are investing, and we are precisely at levels that in the past year we sell. Okay, so let's do mentally an accumulation of different arguments saying that we are going higher versus we are going lower, and keep separated the arguments for Bitcoin versus alts. Okay, because obviously there is Bitcoin season and altcoin season, so we might sell alts and maybe Bitcoin has a little bit of leg to the upside. Well, let's keep looking at what else we have. We have super trend, very basic indicator, well known, but in Bitcoin, when you use it in the weekly, it's perceived as many investors as just a way to ride, the whole cycle of Bitcoin with less risk. Okay, and I'm talking about the weekly, so it's very long term. You can see here, for example, in July, it had an uptrend more or less until here. It's very delayed, so this exit it looks more good than it is, but it's actually telling you to exit there. But you get the point. It shows more or less all the time that it was an uptrend, and we're getting very close to crossing this and turning into green. Now, because it's delayed, for example, the best entry was in July around here. And at the time we turn into green, we are already at 54. So it's a pretty late signal. But the fact that we are approaching so fast the red line is telling me that, well, we're going in the right direction. Here's a new indicator that I have never shown. This indicator obviously is not mine. It's called the Fisher. And this indicator has two moving averages. And in the monthly, it's extremely precise when you use it to forecast where the total market cap of crypto is going. And in the monthly, which is a huge signal, right? So it signals right the top there, top and the bottom. And these are signals that happen every many years. And if we close January, where we are precisely now, this will be a bullish cross for total. Okay, so these things are monthly signals. So, you know, there's a time frame of 1-2 months for things to play out. This could fake out and come back down. So don't take it as I need to do something immediately, but it's a very serious signal. You know, once you see one of them at the bottom, you see a lot of upside. I'm going to cover this as well. This is also very important. When you're trading Bitcoin, when you're trading an asset, in fact, in general, what most investors do is they draw these areas, these boxes that are ranges that the price is moving in between. For example, you have a range here, this is a box, and you have another range right here. We could call this range below the FTX range. So because we fell from there and we entered this new area. So once we broke 18.5, which we actually struggled to go above, right? We have a struggle there. And when we were coming to 18.5, I was shaking and thinking, oh my God, we are going to get rejected there. We're going to go to 10K. But actually, we broke it to the upside and we went to the next range. Okay, this range is flagged exactly by the drop of FTX. And that is exactly where we currently struggling right now. So it's a very important level, and that's why people are selling, because normally many traders, they wait for a substantial drop and they wait for coming back to that level and selling on you. And well, in this case, it was it got bought. It struggled during the day. I remember there were many sell orders there, but they got liquidated to the upside. And nothing says that here we won't be able to break it. So at the moment it's being sold, but there can be some accumulation, some sideways, and then back to the upside. That's still possible. It's not impossible to break these levels. It's absolutely possible. Hive, I have some news. So we get the Hive, and we are getting to that point in the market that I mentioned many times in the past. What did I say? I say the Hive, the sell signals of the Hive, the whole bear market have been almost 99.9% accurate. All of them, if they say sell, sell, okay, wait a few hours. If it's the 1 hour, wait a couple of candles of 4 hours, or wait a couple of candles of 1 day, and they all sell. We can look at the performance in the past and find multiple signals, and they all end up selling eventually. But right now, we have one in the 1 hour that trigger at this is 18.8. And this one is also 18.8. They actually trigger at the same time. And when I saw the signals, they got completely ignored. The price is causing them a drawdown of 15%, and here 12%. So this could be an indication, right, that we are entering a very bullish movement. Well, we know that we are in a very bullish movement, but how long it could last? You know, it could go to 25K, to even 30K, because when the bearish divergences, the Hive uses exactly that. They get ignored, the bearish ones. Okay, it's a good signal that some good momentum to the upside is completely ignoring. In other words, when you get a very bullish rally, all the bearish divergences of any indicator, they get completely ignored by the price action. And that is bullish. So we are looking here at the BTC in the daily, and I'm using TTP reverse RSI. This is an indicator that helps me, by looking at the RSI, to forecast where I think the RSI could go, and then input those potential levels that I think are likely, and then based on those levels, this indicator will do the reverse engineering of the RSI, and it will tell me where the price might go. So it does the opposite of RSI. And as you can see here, we are extremely overextended on the RSI. So this is calling for, at the very least, a cool-off period, right? I'm not saying a dump, but Bitcoin could stay in this range above 70 for many days. It has done it in the past. In the bull market, not in the bear market. You won't see any of that in the bear market. But if this is a sustainable rally to the upside, we might be hovering above 70 for a while, maybe at least 1-2 weeks, who knows. And I'm plotting here some levels I think we could potentially go next. So if we have a cool off, maybe it's just a tiny cool off and we go to the level of 70, that will take us to 19.9, okay? And now if you take note of those numbers, and there are going to be many numbers that we are going to start repeating, okay? 19.5, 18.5 are gonna be recurrent numbers, 25K as well to the upside. We're gonna see them from different indicators. Then if we get confluence, you can make your own decisions based on what you think is more trustworthy. We have the level of 50 as well. So a cool down that comes to 70 might indicate that we are still very hot and we might still make higher highs and continue our way up. If we cool down to 50 and we bounce up, that's still bullish. Okay, an RSI above 50 is considered by many investors as we are still in an uptrend. So a cool off of 50 will more or less coincide with the uptrend of the momentum and confluence with their still upside. Okay, below 50 things start looking more shaky. Definitely going to 30, it will be really painful, and I'm gonna show you. So if we go to 30, let's look at the levels I have here so you can follow the colors. 70 is going to 20. Okay, if we go to 50, we will go to 17.9. If we go to 30, which is completely losing the momentum, that will be 13.6. Okay, obviously 8, that's a number that I grabbed from around here, I think, or maybe it was the lowest that we've seen in the daily, and I just put it there, but it's absolutely ridiculous. Obviously, it's a negative number. We cannot go to 8 RSI from where we are, okay? So that's out of the equation, at least for RSI. In the weekly, if we do the same exercise, we can see that we are in the weekly starting to shift the momentum to the upside. We are starting to bounce on a trend line that goes up. Whereas in all this area, since, first all-time high of 2021, second all-time high, we were just bouncing and losing momentum. Now we are going in the opposite direction. So if we were to sustain this, okay, and I draw this in the past live stream, 31 of December was, and I say we could go in this way on the trend line going up. A few days after, we bounced there and we did something I wasn't expecting it to be so high, but the weekly right now is sitting above 50. Bullish for weekly. For how long we haven't been there? Well, we just look around on the above 50 in March 2022. But before that, it was in the middle of the bull market. So we are stepping in from the technical point of view on RSI on the weekly in the 50, which is bullish territory. In the weekly, I cannot believe I'm saying this, but yes, weekly, incredible. Sometimes I think I'm saying something wrong, but it's true. Bullish, yeah. And let's look at this. Let's look into some on-chain data analysis. I don't only look at on-chain data analysis. As you know, I like TA. I need to put different things in Confluence. And it's very good to keep an eye on all the sources of information and not just TA, not just on-chain data. On-chain data tends to be very slow, but it gives me a lot of confidence once you look at things that have repeated for the whole history of Bitcoin. And what we are seeing here is hash ribbons, okay? Hash ribbons has to do with miners' capitulation. And what we just had last night, Sunday, before Monday starts, was a buy on the weekly. And again, I cannot believe we are having a buy on the weekly. You wait a year or more than a year to get another buy. The previous buy was in August. It's a delayed signal. So we already moved to the upside here, 48% when we got the buy. That means that the miners are back to be in profit, doing good. They are accumulating. It signals a bunch of things. Can there be drawdown from the time there is signal? Yes. Okay. And I want you to keep these numbers because people see the buy and they think, okay, jump straight in. There are some occasions that you get a buy in this signal and it's just all the way up. But I will say only a few of them. Most of them, they have some drawdown. Okay. You get the buy, price goes a little bit low, and then it heads to the upside. For example, here, it signaled at 40K. We're 40K, where is it? Around here. And we went down 7% from that price before moving to 60% or 58% to the upside. In here, even if it looks insignificant, the signal, I think it was, yes, exactly there. And I did a calculation, so it doesn't work. Yes. And we had a drawdown of almost 10%. So if we had a drawdown of 10% from the top there, that will mean an entry of 19K. Okay, so 19K from the point of view of hash ribbons is around the range that you get these drawdowns. You can have less drawdown and sometimes you can have no drawdown. Okay, so if you trust this signal, DCA could be the way. If you're aggressive, just all in, I guess. That's the definition of aggressive. And let's look at previous signals as well. We got one at the bottom of the market, of the bear market in 2019, January, actually on a move down. It's not always on a move up. And from there, it had a rally of 300%. We got another one here, another minor capitulation, but COVID got in the way. So it's the only signal in the whole history of hash ribbons on the weekly, okay, that went up, but then it went massively down. So this went up 60%, but then from there, it bottomed 41%. So that's a pretty big drawdown if you don't want to consider that you took profit at 60%. And many people got caught there and it just went straight up. After the COVID, there was another signal and then just up. So that's very good to keep an eye on. CPR levels are driving me nuts. So the 3 levels of resistance are broken. The whole bear market, we never stick our heads above the 3rd resistance, which is at 20K. And here we are for the first time above. The levels are 19, 20, 17. And obviously I was thinking if we fake out here and we don't manage to get to the first level, the model says there's a rejection and you should go below the pivots, the white lines, and then straight to the downside to 15.7, 14.9. That didn't happen, obviously. We are right here. Level 2 and 3, once they are broken and we have broken out to the upside, they become strong resistance. That's what the model says. So in here are this is the value area when you are in this bullish context. Let's look at the last time we went above the third level. That was almost right before the all-time high. Okay, so that's the magnitude of the movement that we just had. We had another one here before the first all-time high of 2021. On the actual move there, you can see that the model is great. You hold a support, the pivot. If you cannot manage to get above the first resistance, that's a bearish signal. Okay, if you don't touch the first one, you dump. Almost 99% guaranteed. Here, again, you don't manage to get to the first one, okay, down it is. And in here, well, we did this. Let's look at how it was 2017. I'm a little bit curious now. And where is this? Around here. So you can see third level. Again, third level is usually reached when you are in a bull market, not when you are in a bear market. That's why this is pretty interesting to see. CME gaps, we don't get many, but they are pretty accurate. Okay, when you get a CME gap, the price jumps from one place to another like a quantic jump, and they usually get filled with very good accuracy. You can be very comfortable that this has a very high ratio of success. And right now we are entering on our way to fill it. It's going to get filled at 19, almost 19.9. Again, another 19.9 that is appearing in the chart. Remember it. Number of addresses that appear for the first time in a Bitcoin transaction. This signals that the network is growing. We got two moving averages here in green, the monthly, and white, the yearly. You can see that we broke out here. That means that the network was growing around November. It's been cooling down since 8th of December and found a local bottom on the 1st of January where it started again going up. So that's why it's important to monitor the direction of this green line and how is it positioned relatively to the yearly to see what is really happening on Bitcoin, okay? Because you don't want to be focusing on only what people are doing with futures. When people trade futures, they take profits. They close the positions and every single pump reverses. You want to see that the network is also growing, that we hold above the yearly and we have a movement of zigzag to the upside. That shows that it's sustainable. When you break below the yearly, it's the end. Okay, there can be a dead cat bounce. The 69 is considered by many, including myself, a dead cat bounce. Still, from the technical point of view. And this red line there shows the bearish crossover, bear market. So we don't want to cross below that. At the moment, I was worried we're going down, but we found, a higher low, and potentially this could be heading for another move to the upside. I'm sure we're going to see some more of that if the price keeps, bouncing up or consolidating. I'm sure the price action we saw in the last days is going to attract new people into the network, and we're going to see them to do their first time transaction on Bitcoin. That's going to increase this indicator. Super Goopy, I find incredible. Look at this fractal. I mean, it's kind of a fractal, right? So I see that the price went below and it started doing this movement like this, consolidation and higher highs, and then a pump into the red zone. Okay, how similar is that from what we are doing now? We have this dump here in June, we have some struggle there, and then we have this that in some way it looks similar to this. Different proportion. First of all, is smaller. Second, the move hasn't reached almost the top of Super Goopy. Top of Super Goopy is right now at 27K. So if we wanted to do something like this, we will have to go to there And then we could consider that this whole thing there is equivalent to that. I wouldn't say this. This is too small, too little time in there to consider it comparable to that. On 2015, very different story, double bottom, and then there is not a single, God candle that breaks all the red. There's a stairway to the upside instead. On the EMA ribbon, I was going to say hash ribbons, EMA ribbon, I wanted to show you how things flip when you enter the bull market. Normally you dump here, you go all the way and you break all the layers of the EMA ribbon, and that triggers this flip, right? So when things twist and you kind of enter bullish territory. What we have done so far hasn't gone to the top, which should be 25. If we get to 25, again, same number, 25, 27, that will flag massive bullishness, and that will probably trigger a reversal here, some sort of twist there on the EMA ribbon. That will be lovely to see, but we're not there yet. Volatility, as we were saying, we were at the lowest levels of volatility in a long time, and we are heading to the upside. Now, let's look at the levels where the volatility reverses. Those are very important times because that also signifies a reversal, a pullback, a slowdown in the momentum. So there are multiple levels here that we can see that are looking at the same level where we are right now. So we could potentially top in volatility at those levels. If not, the volatility could reach the next confluence of volatility of Bitcoin, which is 0.44. We are talking here about the Bollinger Bands width. That usually is one of the most common for volatility. I got other things for volatility, but this one is one of the most common. And you can get to 0.66, which is less frequent, okay, but is obviously requires a much larger move to the upside. So as you can see, is there still momentum for more volatility to the upside? There's plenty of headroom. We could go to 0.44 and do much larger move, or even to 0.66, and that will move the price a lot more. So this move of 0.66 right there is, let's do it with this measure. This is a move of 142%. So you need a lot more than 25% that we just did to get to 0.66, but it's doable. Fibonacci levels with EMAs, I love it because I see all these things, all these recurring patterns that happen on every cycle in a very concise way in a single chart. And we can see, the drop there to the lowest level, the drop in June to the lowest level. And then we see when we cross the second line, which is where we are right now, we're crossing the second line. And according to this particular model, what I read is once you cross above the second line in the history of Bitcoin, you get to the third line. That is more or less what happens. What can we do? We cross there, we fake out, we hold, we go to the third line. We cross, we go straight to the third line. We never do it in the same manner, but that's kind of the target. Third, and third. You want to know where is the third? It's located more or less at 40K. These are moving averages, obviously, so that this level won't stay there for much longer than 1 month. But, this could be moving towards the upside, bullish as well, and that's a target that this model says is on the table. Fair value gaps, I always mention this, and people normally don't take them very serious, but fair value gaps are acting like magnets. They are formed by candles that are very long, where the buyers and the sellers, they couldn't get to do their own position. The price moved too big to the upside or dumped too much, and then the buyers couldn't enter or the sellers couldn't enter. And they are all shown in this chart. I intentionally left where were the previous fair value gaps, and they got all filled. The same, now we have fair value gaps. We have a party of fair value gaps to the upside. That is liquidity that eventually the price will want to take. Okay, you got from 16.8 all the way to here. We're gonna see the same levels appearing in other models as well. So these are very important levels. To the upside, we have a leftover. Okay, so this fair value gap here was larger. It was pretty much all this area that right now got taken out because the price went to grab that liquidity. So that liquidity is gone, and there's only a leftover there at 21.5. Once we go to the other chart, you're gonna see that there is a lot of liquidity at 21.5. And you know, if we bounce here, market maker is gonna be really happy to also take it. Kellner channel, I just cannot believe where we are. I mean, we haven't been there since bull market, and actually not just this side of bull market. The only place we've been so high above the Kellner channel is in the most bullish area of a bull market. Not even here, right, where we are losing momentum, but in the most bullish area. So that's how powerful was the movement. Look how far we are from the Kellner channel. It's just incredible. Now, the price in Bitcoin in the bear market tends to respect it as resistance, the Kellner channel. And in the bull market is actually a support. You know, the higher, the upper band is a support, and the middle band is like a last resource. You know, you still go to the middle band in the bull market, and let's see where could that go. So if we go to this top band and we keep bouncing to the upside like crazy, that will be a bounce on 19.5. The middle band is 18.3. So 19.5, 19.9 is kind of the same. 18.5 is very important because that is a confluence with the previous box. Remember, we have a box. This is the FTX range. We do not want to re-enter the FTX range. Remember that. It's super important. We enter the FTX range, and I'm no longer a buyer. So if we are here, I buy, you know, and I expect a bounce and I long. If we re-enter 18.5, I'm a seller, I'm shorting, and I'm expecting lower lows. That's kind of my personal perception. On long time EMAs, we broke this is the 200, right? Yes, it's the 200. Let's see. Oh no, this is the 300. This is the 200, but these are daily levels. Okay, so we are on the way to the red. We are about to have a bearish crossover of the 50 below the 200. That's also important to know because, you know, investors, they react to these things even if you don't care about them. They go viral in videos and in Twitter, and people start reacting and selling. This fractal got invalidated. I'm glad to tell you that it got invalidated because for so long it was following perfectly. It was going to be to the downside, targeting 10K, but it kind of did the opposite. You know, it flipped the result. It did the same, but to the upside. Interesting. So the same pattern up until then, and then up. Great. We went above to the largest area of volume. Okay, so 20K is massive level of support. It should hold as well. We want 20K to hold. Just a very quick update on all these trend lines I talked about in the previous video, that we were saying we are holding this. We could potentially, you know, pump to the next trend line, which is there. I wasn't believing that we're going to do that, but yes, here we are, and we're going towards that trend line. We also had this trend line here that has the longest touches in the past year. I keep looking at this trend line. It's extremely important. We went above and we started there consolidating, and we are in the next target. Drawdown, we are finally out of the green. We are finally out of the green. Being out of green is the value zone. This is the max drawdown that you see in a market, and every single bear market has one green area where you buy, and you have a red area where you sell. This is the drawdown strategy, one of my indicators. And in here, we are out. Can we go back into green? Yeah, of course. Look how many times we went back into the green. If we cross below there, we're gonna get again green. This model is driving me nuts. It's the top and bottom of the markets. And look at these trend lines. Every single cycle, we bounce up above this upwards trend line. And we were supposed to break down there. That's kind of the expectation of the end of every single bull market. You drop below the trend line and you go way low, and from there you build up another bull market. And my expectation was to kind of do that, right? So to go below, and let me draw it, to go below and stay there and start building another bull market like we always did. But instead of that, we are doing something extremely weird. We are back above the trend line like if we were still in the same cycle, right? It's almost like if in this cycle, you go here, you fake out, and you keep going higher, okay? So I know that there are some people out there that they're saying that this cycle is just a longer cycle and that we are still in the same cycle. And this is the only indicator that I find that is kind of supporting that theory. Like, you're still bouncing on the trend line. This was a fake out and is still on the way to the upside. That's really odd. I'm gonna skip this one. Yes, I'm done with these indicators, and we're gonna go now to this that is probably the most important indicator today. This is the advanced NVT signal, okay? Network value transaction. And please, sit down and pay respect to this indicator, because this is no joke, okay? If you are in the 2017, the blow of top was precisely when this indicator crossed this area there, the red line, okay? And every time we cross above the red line, there is a massive dump. That's too overheated. There are a few exceptions that you could argue, okay, this was just that I remember by heart. This is 10% drawdown there. I just calculated a few minutes ago, but that is not the red line. The actual red line is there. Okay, so this thinks that this was going to be the all-time high, and we carry on. So there was still move to the upside. In here, we are at the same point we were at the blow of top of 2017. So if you are not taking serious this move, look at this. We go from way below the green to the red. We did that here in 2017. From below the green to above the red. Just crazy. It's crazy, this move. So what am I taking away from this is that I do not want to be a buyer here. I mean, look at the history of NVT. Do you want to be a buyer above red, with the exception of here that you buy a 40 and it goes to 55? I don't see any other place where the price goes up while being in the red. And today we got a signal that says that the price, that the indicator NVT right now cross below the red. So crossing below the red means, we're on the way to cooling off this indicator. And that means price going down. We'll see. Now, in terms of liquidations, I also want to cover this. I haven't shown this indicator in the channel ever. These are the positions of the top traders on Binance. The red is the number of shorts, and green is number of longs. And I don't know why it does this. Sometimes it disappears, but this on the top instead is the top. The global longs and shorts. These are all the people. So all the people, what they're doing, these are positions and these are accounts. And I normally look at this pattern. When the shorts in the top trader accounts, they go above longs, usually the price, where does it go? Down. And here, down and down, and then dump. Again, top traders shorting is something that, we need to take serious. Top traders shorting. And guess where we are? They've been shorting like crazy. Okay, here, many of them, they got massively liquidated. But right now, they are again increasing the short positions right there. And we have a red candle and they're shorting. Okay. Now, another thing I want you to be aware, open interest, which is now loading. Let's put it in the daily so you can see this downwards trend that popped up into my eyes. And I got, what the hell is this? What's going on with the open interest? And we got it. There you go. You see, look at how the market is deleveraging. How from here, maximum leverage, then less at the actual all-time high. And on FTX, it did another touch precisely at that trend line. So that trend line is kind of the trend line of you have to deleverage right now, okay? I don't know, maybe when we cross above this trend line, it's going to get a lot of leverage again because we are back in bull market. But since we've been on this downward sloping trend line, every time we meet with that level, we deleverage the market and a lot of liquidations, and the open interest goes back to levels very low, like 2-3 billion. So the next level of potential liquidation is at 5 billion of open interest. On FTX, we were more or less around there, 5.1. And that's also very interesting. Yes, let's go to this one. This is also extremely important. What we are looking here is at all the levels of liquidations that High Block Capital in this website, they calculate. They use an heuristic to calculate where potentially these levels could be. They read the order book and they know where the positions of 50x, 100x, 10x, 2x, whatever, and they aggregate all that volume and they plot it in this chart. And you can see that there was a lot of liquidations of longs there that got taken out by FTX, and the volume of the last 2 years, very important to look at 2 years to see what are the next targets, because market maker targets what? They target liquidity. They want to go to grab that easy liquidity. And the next levels are 23.2. There's at 23.2, there's a massive amount of liquidity. Look, this goes all the way to 200 billion. So we have 143 billion to the upside there. And here we have 140 in liquidity. Below we have 17, this should be more, 136, there you go, 136 on the downside, and that is at 15.2. And below 13.2 has also a pretty big area of liquidity there, but it's less than 15, okay? So those are very important levels. And if we go to shorter term, which is also very useful to know where are we gonna swing next. We are leaving a lot of liquidity right here in the month, and on the last 7 days, let's go very quickly. You can see as well in the 17 to 16.6 and at 18. Of course, if they take out this liquidity, we will be right below the box of FTX, the FTX range. Let's split, not go there again, because that means more downside. If we get to liquidate these people here, I will assume that we are on the way to liquidate even lower levels. But those are there, right? If we go to 20 and we hold and we just liquidate these people there, or even stretch it to at the top of 18.5, then there can be reversal. If not, there will be reversal to the upside, but it will take longer. That's the point. And This is mind-blowing. We haven't been at 40 billion gap of longs over shorts at risk of liquidation since bull market. 40 billion is mental. Every time we were in the green in the bear market, we were reaching 4 billion, 6 billion at the maximum. 40 billion. It's just crazy. It's too much. All right, let's look at some bots. I'm trying some bots at the moment, and these are real accounts, and I'm trying a new signal that is called Snowden. I don't know if you remember the guys from Tyson. They have started working on a new signal, and at the moment I'm testing it with perp, with futures. It's been running for 4 days, and also I tried with spot, and I'm trying it with down and up tokens. And this is the performance of the last 4 days. It's too little to say anything, but I'm really impressed on how it performs, and I have the intention to offer it to members as soon as I feel comfortable that this performance, is sustainable, that there are not technical issues with the signal. So I'll keep you updated on how they're going. If everything is green 1 month and we have a dump and they're still okay, they're doing fine, then I'm going to offer it to our users. So here's ADA app, the bot using that signal. Here we have the perp version. This is invested with $80. Obviously, you need margin to be able to run this, but with $80 it has made 167. Is still doing good. And Snowden without futures is a little bit more humble in the returns, but it's less risk as well. And I wanted to show you this bot is from last year, and since Free Commas had issues with paper trading for quite a while here, so there were no trades. Coincidentally, things started to work with Bitcoin. Paper trading also came back and it started doing really well. This is just an anecdote. And I have to tell you some news. I'm working with 4 different companies to integrate signals and services, bot assistant and different things. And my intention is to integrate first signals, buy and sell signals. That's kind of the low hanging fruit. I can do that pretty quickly, I guess. And we can do that with MySAR. We can do that with AltReady. I have a meeting with them this morning. Plurex as well. I met with them this morning. Very cool. They're all very different. They all offer different things. And I'm not just looking at the technical side, but also what sort of discounts TTP members can get to jump to try these platforms. Pionex, of course, is there as well. I've been working with them for a long time. They have now implemented QFL signals for me as a personal request, so that's awesome. And they're also working on webhooks, so we can start sending signals to Pionex. This platform is also great because you don't have to actually pay, so it's pretty cool. And yes, that's what I have for today. I think the last thing I wanted to show you, but I won't have time to do that. We only have 5 minutes. So let's see if there are any questions very quickly. Hello, Patricio. ¿Cómo funcionaría, this is in Spanish, cómo funcionaría la confluencia del indicador proyección del RSI con el heatmap de liquidaciones? He's wondering how it will work, if we use the heat map. Patricio's working on a version made on TradingView that can produce this data, based on an heuristic. It's a very cool script that he's preparing. And we are collaborating on doing some things. And he's got this question of how we could, potentially integrate the reverse RSI. And I think it's a cool idea. We could do something around that. The RSI reverse is a great indicator to know where you could be headed next. And it can give you very low risk targets if you understand how RSI works first. That's kind of the requirement. Yeah, but that could work pretty cool. All right. If there are no other questions, guys, this is the video. I hope you enjoy all the information. I hope you are not grabbing your head now, not knowing what to do. It's usually like this, you know, you're never ever going to get every single information telling you bullish or every single information telling you bearish. But what I'm here for is to bring to your attention what I think is more important to take that decision. And there are multiple cards on the table, and you're going to have to pick your game, you know. And at the moment, I can tell you, as a completely wrap up, I'm planning to slow down on alts. Okay, so the server signal saying warning sell, never have failed, trading alts, you know, a serious cool down on alts must happen. You know, at least I'm gonna respect Cerberus for that. In regards to Bitcoin, I want Bitcoin to hold above the range of FTX. I don't want us to dump again. That will be fire in the house kind of signal below 18.5, unless it's just a fake out. You know, sometimes you enter a range and you get bought up very quickly. Staying below 18.5 for an extended period is not great. You know, if you go to 18 and then 17.9 and you stay there for a few days and you don't get bought up, there's no volume back into the range of above 18.5, disaster. Most likely. Okay, nothing is guaranteed, but disaster for me. I will forecast very likely disaster zone. Anyways, I hope you enjoyed the video. If you did, please hit like, subscribe to the channel, you know, and leave comments. That's the best thing that you can do for this channel. I'll see you in the next one. Take care. Bye bye. Have a good day.